was an absolute day of historic carnage on Dalal Street. Both our benchmark indices hitting historic lows as well as ending on historic lows. The Sensex ending at a fresh 2-year low. The Nifty closing at its lowest level since June 2017. Remember, on Monday, investors thought that this was it. There was no need to press the panic button after they lost nearly 7 lakh crore in market cap. However, it was a terrible Thursday as we lost over 11 lakh crore in today's market session in our market cap. So clearly worries intensify. It was deep cuts across sectors, across the board. And we have Ajay Bagga, who's a market expert, to make sense of how much lower can we go. So Mr. Bagga, how much lower can the market sentiment go? All experts we've been talking to are now in wait and watch mode after today's deep cuts.
Yeah, absolutely. What is happening to the markets is a global phenomenon. It's a issue which is all over the world. US markets are down 20%. Brazilian markets are down 27%. We are down 20%. So it's not that India is alone. So very difficult to forecast where markets go from here. A lot will depend on how far the coronavirus spreads and what is the economic impact of that. What are the measures taken by Reserve Bank of India and Government of India to mitigate those impacts? Those are the crucial issues. But markets are like that, Sakshi. They do go down regularly and then they come up also. So what is true is that the 100 rupee BSE Sensex of 1979 went to 40,000. Today it is around 30,000. That is the reality, but it has gone from 100 to 30,000 over the last 50 years.
Right, Mr. Bagga, I'd like to ask you two quick questions that our viewers want to know. One, in a scenario like this, what should be investors looking at? What should be the stocks that they should be eyeing? If at all, any quality stocks that you'd like to name? The other being the fact that the RBI has announced a dollar-rupee swap. So if you could decode that for us as well.
Yeah, so first on your investments, just stay invested. It's very difficult to make money trading. So, hardly anybody is able to forecast markets. The best money is made by the patient money, which is the retail investors who are your viewers. So just stay invested, continue your SIPs. This might take 2 months, it might take 2 years. No one can say. Our probability is that it's a few months issue and it will get resolved, and Indian markets are on the path to recovery along with the economic recovery. So we are in a very good position globally where the economy is also going to turn and the markets will recover along with it. So stay invested, stay patient, don't take undue risk, don't try to call the bottom or the top of the market. In terms of where you should invest, index funds and diversified large cap funds would be the best. Stick with quality right now. Stick with the top end. You can see the Nifty 50 shares or the BSE 30 shares. Stick with that. In terms of sectors, private sector banks, consumption, and pharma. And within pharma, I like MNC pharma, multinational pharma more than Indian pharma. Those are some of the things. As far as the RBI window goes, it is more to supply dollars into the economy. See, RBI is sitting on $487 billion of FX reserves, which covers nearly the entire import bill of India. We import about $500 billion of goods a year, and RBI has nearly as much of reserves. So we have a lot of dollars with us. But what was happening was dollars were getting scarce in the market because of global liquidity. So RBI has stepped up and said, I will provide dollars in the market and you return it to me after 6 months once you receive the dollars yourself. So they are creating a lot of liquidity in the market. They are creating easy cash in terms of dollars in the market. That's what we can understand in lay terms.